Well, first, thank you for having me. Jim has been a friend, and Dave Mawini, who's here, has been a friend for a long time. And as he mentioned, I was a CMU alum. We'll talk a bit more about, I am a CMU alum. We'll talk a bit more about my background, and my son is now a freshman. I don't know if he's here yet because it's early, but hopefully he'll get here soon. So, Ardent, we'll first talk about Ardent, and then we'll talk a little bit about me. And then, given I'm first, I figured I'd talk about, generative AI broadly, right? Everybody talks about it. Everybody thinks it's important, but is it a hype cycle? Is it real? Like, 10 years from now, will we still be talking about it? And then, within that, what's most important? And so hopefully that'll frame the day. So first, Ardent is a thesis-driven, early-stage, high-conviction fund. So what does that mean? So first, thesis-driven. Like, the way we work is we spend a bunch of time doing research, focus in on an area, and then we make bets against that area. Number two, we're early stage. So we come in at the earliest stage. So Sinkalp, who's here, who you'll hear from later today, we backed him. I backed him personally when it was 2 or 3 people. Like, that's when I tend to come into a deal. With the fund, we invest anywhere between $500,000 and $3 million, and then we follow it after that. High conviction means that we have very few bets. So we're not looking to spray money everywhere. We're looking to do a lot of research, focus in, and make a few bets. When we set up the fund, we had this broad theme of looking at how automation technologies are changing the way we work. And so obviously AI was sort of at the center of that. When generative AI started, we were all over that given our broad theme. So I've been around a long time, as was mentioned. So, obviously went here. And the thing to me about Carnegie Mellon is really hard when I was here for any students. Like, it was brutal. And I thought I was never going to come back. And I've come back over and over and over and over and over again. And the reason I do is because Carnegie Mellon is like the epicenter of technology. It's always years and years and years ahead. And so when I started to angel invest, I had been a venture guy for a long time. I was with the fund for 15 years. We had $650 million. I invested $100 million of that. It became $400 million. I did all these things. But I started a company. I'd been out of the business for a while, and I said I wanted to get back into it. And I came here, right? I came here over and over and over again to sort of reacclimate to technology. And that led me to seed invest, and that led me to start the fund. So generative AI. When you think about technology, again, my approach has always been to identify changes in infrastructure, make bets against that, and then follow it into the application tool. That's what I do. And so I did that on-prem to cloud. I did that for mobile. I did that for social. And so I'm always looking at these infrastructure things, and there's sort of 2 things to think about when an infrastructure comes to fruition. The first is it hyped or not? Like, is it a hype cycle and it's going to go away? And then the second, which is just as important, is timing, right? And so when I started to angel invest, I sort of dug in on 3 areas. I dug in on crypto, I dug in on quantum computing, and I dug in on AI. And I'll start with quantum because timing is really important, as I said. And so this is around 2017-18. I felt like it was going to be a technology that was going to change the world. But everybody was saying it was 3 to 5 years away. But when you really looked at it technically, a lot of the things they were trying to do had never been done before. So I just couldn't see it 3 to 5 years from then, right? So I didn't spend time on that. Crypto, I did a deep dive, and I felt like there was a lot of hype. I felt like there was, when you really looked at the technology and you really looked at the usage didn't match the hype. When I dug on AI, I really felt like there was real fundamental technology change there, and that's why I focused on that. So now, I use that same lens with generative AI. And so I'm not going to spend any time on this because other people later today are going to focus on it. People know what traditional applied AI is. You use it for algorithmic trading, dynamic pricing. Generative AI, you're going to hear a lot about it later from people who just do the technology every day. You've seen it with ChatGPT. The key thing here is that it allows you to sort of create. It creates as opposed to you just analyzing, which is a fundamental shift. So is it hype or is it not? That's sort of the question. And so let's sort of dig into it from my perspective as a VC. So first, let's talk about enterprises and enterprise software. This, to me, is the most important slide in this deck. So I'm just look at it first. I know it doesn't look like much. I know it does not look like much. But to me, just remember this slide. Take a picture of it. Remember this slide. So any enterprise today, like any enterprise today, about 20% of the data is structured and about 80% is unstructured. Just every business, that's the way they work, right? So now first, like, what is structured data? So structured data is like customer names, data in Excel spreadsheets, things that go into databases, things that software can analyze, understand, and do something with. That's structured data. So every enterprise software business, like every one that exists today, all of them, Workday, Salesforce, SAP, any enterprise software business you can think of runs on structured data, like all of them, right? And last time I checked, that was a $145 billion market. So all of the structured data that we have drives this market, and it's still growing. It's like 6 or 7, 10%, depending on what you look at, a year. So 145 billion and growing, all unstructured data. And it helps worker productivity, right? It helps you be more effective. Salesforce tells you who to reach out to today. That's what it does. Helps you be more effective in what you do, right? All right, unstructured data. Again, 80% of the data that's in the enterprise, right? So your emails, customer feedback, PowerPoint presentations, call center transcripts, like all of that is unstructured data, right? And prior to large language models, I mean, aside from people who are at Carnegie Mellon and know BART and other things that were doing this before, like software didn't understand this. Like it couldn't operate against unstructured data at all, right? And so now, for the first time with LLMs, it can start to understand this craziness, right? And the thing about it is, as I said before, it's not just understanding it. It can now sort of create, right? So it's doing something that software didn't do before, like it's creating emails. It's creating PowerPoint presentations. And so you sort of move from worker productivity to doing work, right? And that's something that software just couldn't do before. So as I said, 80% of the data is unstructured. Software couldn't understand it. Before it was just focused on worker productivity. Now it's doing the work. And so when we did the analysis, we see that as a $500 billion to $1.5 trillion market opportunity that doesn't exist today. Like it doesn't exist because the technology is just coming to fruition. That is very real. And you're going to hear applications that are leveraging this today. You're going to hear about how it's being used. But again, like this is real. And this is going to fundamentally change the way work is done. And it's moving fast. Now this is old. The key thing here is that ChatGPT 3 came out in November 2022. A year later, ChatGPT 4 came out. Like the way these models work is the data is what makes them, powerful, right? And so it was trained on 10x the data a year later. And so this stuff is moving like super, super, super fast. And so like it's not standing still. That's the other thing I would make, the point I would make. All right, I don't know how much time I have. I'm going to get into the way we think about the market. So just to frame this, as I said, we're sort of a thesis-driven fund, so we go like super, super deep. We've met with 3,000, we've seen 3,000 companies. We've met with 300 plus founders. And again, high conviction, so we've made 5 bets, 3 through the fund and then 2 on my own account. And this is sort of where I think we are. So I'm going to take you back to mobile when the iPhone came out. So the iPhone comes out. A bunch of companies were started, right? In the first year, it's like, oh my God, this is like the best product ever. And the thing was, like those early companies weren't successful. And the reason they weren't successful was 2 reasons, okay? One, it takes time for founders to understand a new medium. Like when it comes out, you have to figure out like what's truly magical about it. So that's the first piece. The second piece is it takes time for infrastructure to be put in place. And so if you're an application company and you start a company as soon as a new tech comes out, You have to build both the infrastructure and the application, and it's too much, too early, and it doesn't work. So what happened here is the first 18 months, a bunch of companies were started. Many of them didn't work. And then, a lot of the founders start to understand, well, wow, there's this location-based service thing in the phone that we've never had before. We should use that for things like Uber or things like DoorDash. And those were the companies that became the category leaders of the next iteration, 30, 50, $100 billion companies. We think the same thing is going on with Gen AI. So the first 18 months, a bunch of companies come out. There was no infrastructure. They didn't understand the medium. We looked at a ton of companies, didn't make any bets. We're starting to make bets now because we're about 18 months in, and the quality of the deals is going up because infrastructure is in place, and the founders are starting to really understand what's going on. Number of issues, no amount of time. Defensibility, huge issue. These models are super powerful, so when you're looking at a startup, you have to make sure that they have enough defensibility in what they're building. Second, accuracy. Again, I'm at CMU. You all know this. They hallucinate. And so that's a big deal, right? Like if you're trying to create a generative AI legal application, hallucinations are a problem. Regulatory, huge issue, by the way, an open question, right? So all of these models are trained on most models are trained on web data, and it's unclear if they had the rights to use it to train the models. And so how that's going to play out will be really interesting. And then incumbents are not asleep this time, right? So as we think about making investments, we have to think about, well, what is Salesforce doing, and what is Workday doing, and what is Microsoft doing, because they are all moving extremely fast. So these are the issues. This is what we look for. Obviously, large market. Again, I said the whole overall market is massive. The amount of unstructured data that this business process, so taking a step back, software automates business processes, right? And so what we look for is a business process driven by unstructured data. Areas where labor is high, I'm out. Degree of accuracy. Now this is just really quick and then I'm gone. We look for areas where accuracy is important because it allows the startup to add value on top. Complexity of business process, ability to become the system of record. Too complicated, no time. Thank you.